Hello, people. Good morning, good afternoon, good evening, whatever your uh, time zone is. Welcome again to the winning team. Now, this is DXY, the weekly chart. Before uh, diving into the charts, may I say this to us that we don't gamble in this trade. All we try to do is to take the right moment. We look at structures, we look at what we have in front of us, the way it's saying, and we try to take the opportunity. You can predict when uh, there is going to the end of a particular move, but what you can do is looking with the knowledge that you have, you can begin to tell yourself probably something is going to change within this frame. And when it changes, you can actually confirm that it has changed and is progressing, and you continue to update. And that is what we try to do here. We try to let you see what the game the market is playing and how to take the advantage of that based on our knowledge of structure and wave. Now, before now, uh, we know about Elliott wave and what Elliott wave says of the corrective wave and the motive wave. And we know that we have motive wave 1, 3, and 5. The corrective waves are 2 and 4 in that sequence of a motive wave. But of course, largely, we know what we call an ABC format in a corrective wave or a WXY, a double correction, and all of that, which I don't want to go into. But where I want to come into, I want to see something, it's the wave 2 of a particular wave. When you have a wave 1 and you're going to have a wave 2, or you have a wave A and you're going to have a wave B. So if it's an A and a B correction, or if it's a 1 and a 2. Now, when you have a motive wave that is highly impulsive, when you have your wave 1, wave 2 usually corrects very shallow. It corrects very shallow. So in a wave 2, you might see a 61.8 retracement or a 50 retracement in highly impulsive wave. And that will kind of suggest that what you are dealing with, it's very highly impulsive motive wave. So where you're going to see a shallow corrections all the time, anything that has to do with wave 2. But when you are seeing a retracement very close to the end of a particular move, before you change the momentum again, and that suggests likely you are dealing with a corrective wave, a corrective wave. So with that said, I'm going to say this again, that we are thought of a wave 2 as a 50. We are thought of a wave 2 as a 61.8 or 76.5. Wave 2, most of the time, corrects within 61.8 and 78.6. Get that again. Wave 2 corrects most of the time between 61.8 and 78.6, and not even 76, 78.6. But at times, it could correct to 88%. At times, it corrects to 88%. but not 90. When it ticks 90 and it bounces up at 90, it's telling you something else. So wave 2 can correct to 88%. I'm saying that now for us to know. But no more than 88% in most cases. Very rarely, wave 2 can bounce off at 100%. That is very rare. But it could get to 100%, and you don't expect it to break 100% if it's wave 2. So it can bounce up at 100% and continue its normal course, but it shouldn't break it at all. By even a week, it should not break it. So with that said, this morning, we are looking at where is our trades, what exactly are we seeing in the structure and the wave, what are we likely to see? Now, let's first capture the mood of the market on the weekly time frame. We are seeing this engulfing candle. Now, this is an appearance of doji, which tells us that there is a loss of momentum and this thing appears to be rounding off. The appearance of doji here is different from the appearance of doji here. The appearance of doji here is corrective. But the appearance of doji here with this highly impulsive candle tells us that we are at the end of a move. So this might close. In the new week, we might break slightly above here before we begin to push to the downside. That is the mood I can see here on DXY. Now, we may break or cap it or slightly, and we are coming to the downside. Let's look at US dollar index. US dollar index also has not given us a doji, but of course is giving us a small candle. So what we can see also, this also it's very significant because there is a momentum loss and we can change to the downside any moment from now. That is what we can see. But DXY has told us that there is a doji. Also, this is a small body candle on a weekly, which means that there is a momentum loss. And the buyers are weary now. They are kind of weak. So let's look at euro dollar. On euro dollar, it's also a doji that has appeared now, which means we are almost done. When you look at NZD USD, which I just recently introduced, so what do we have? It's almost similar to what we saw on US dollar index. So now let's go back to DXY. So looking at the DXY, what can I see here? On the daily, what I can see here is the first reaction to the downside that tells me that this may be the last correction to the downside. And we may be having the last movement to the upside to break the top or kiss the top before we come down. So for me, this is corrective, and this is where we are seeing a potential formation to shift to the downside. So we may still break slightly above here or kiss the top before we come down. That is what I can see here. Looking at US dollar index also. Now, US dollar index, has put this in an interesting perspective for us. that we can see this move go up, is almost kissing the top. So in US dollar index, we might actually see a scenario where we still see a slight break to the upside. And if that happens, it may potentially be kissing this area. Looking at this, yeah, we don't look at this alone, this doji alone. We look at the possibility of what it can give us in terms of fib ratio, okay, which I'm going to go into very soon. With that said, if I zoom out a bit, this is where we don't want to break for now. So we expect an interchange between 76, 78, 88, but not more than 100, which is at this peak. So if you want to take a small gamble, you can take a small gamble, put your stop loss about 5 pips ahead of the top here to sell. And if the price knocks you out, you're not going to lose anything. But this is we are looking for a potential fall right now. We are looking for a potential fall right now. And one thing is that even if the price breaks the top, it will still correct and give you opportunity to get out if it breaks the top. We are not calling that for now. I don't see that happening. But in case it happens and breaks the top by a week, then it means that it's going to correct, get out of your correction because it's going to go turn bullish. But what I can see is that this thing had given us a single movement here, an ABC that, you know, is a configuration of a B or a 2 wave, and we should be turning to the downside. So in US dollar index, we might still see a slight break to the upside. But what we confirm that we are coming to the downside, it's a break below this particular candle here. Once we break below it, we are coming to the downside. Now, right now, let's go to the 4-hour time frame on US dollar index. Now, the 4-hour time frame is kind of giving me that we might be seeing the last movement here. This may be a fourth wave, like I said during the week, that this may be a fourth wave until we break this fourth wave now. This and the fourth wave of 3, this is like a 3, and this is like a 4. And so this may be a wave 1 and a wave 2 of the ending diagonal. So that is what I'm seeing right now. So this is a wave 1, a wave 2. We might be doing a truncation of waves. So in the ending diagonal, what we know is that wave 3 is not the shortest. There's something telling us that wave 3 will be longer than wave 1. But if wave 3 is not the shortest, so it means that wave 5 will be the shortest. So if we take this as a wave 1 of the ending diagonal and wave 2, we might go up some more to have a wave, probably 3, come down and kiss at 5. Which means that the height of wave 3 here might just be the last height. And in that case, we should be expecting that maybe something like an 100% extension to the upside, or 123 or 127 might be the height of wave 3 for us to have a wave 4 and a wave 5 to come down. So that might be our sell setup in case it's like that. So, but for now, this weak appearance means that we are likely to still push up and do a wave 3 at 100% extension of this wave on a 4-hour time frame. But right now, the first reaction that was captured here actually occurred at about 78. So we might see this go up to kiss at 88 in the case of US dollar index, 88 or thereabout, maybe not more than that. And we have a wave 4 and a return, then we turn bearish. Now on DXY, DXY is rather interesting for me because the reaction here did occur at 88. So the reaction here did occur at 88, unlike in US dollar that we had wave one of the ending diagonal pushing up, the wave one actually sank below this top here. So we are seeing a wave two. Then a wave three might actually cap this area again of 88. And if they decide to break it, they cannot break 100%. That's what I'm saying. So it might just cap this again, and a wave four come down slowly, with five kissing the top like a triple top, and we might be coming down. So, but we need to break this low, and once we break this low, we are in a shift and we are selling. So we need to break. But one thing again is that even if I have said all of that, that we are expecting that this is actually a one of the ending diagonal and a two, it might turn out to be this is actually a wave one, a wave two, and we are doing internal structure of that wave two to turn down again. So price may break low from here. So the decider here now is breaking this top or breaking this bottom. That is what we have to watch for. Breaking this bottom or breaking this top. So once you break this top, this bottom here, we are going down. It's confirmed. If we take this top, we are finishing a wave three, a four, a five, then we are turning down. So that is the formation you should be looking for now. On US dollar index, which is slightly different from that of DXY, I'm toggling between these two. You can see that this had gone up to so I can still see this as going to the to break the top. That's what I can see now. So that is how they are different. This may also go up slightly, touch 88 and begin to fall. So anything is possible here. On euro dollar, so what I've said is that we are seeing reaction on DXY at 88, and price may just tap the top and come down. On US dollar index, we are seeing reaction at 78.6. Price may break the top, tap 88, and begin to fall. But what we don't want to do is to break the top of that big wave of 1 or A. Now, on euro dollar, one thing I want us to see is that, yeah, looking at even this structure, it's kind of interesting. It's kind of interesting because you have to be wary because of the kind of interchange you might likely be seeing here. Because you have to look at all of these and to read the mood. What I can see here is like a 1 and a 2 here, and this looks like a 3, a 4, and this looks like a 5. So this move to the downside looks pretty, complete for me. Now, let me zoom in or zoom out. Now, if we zoom out, we are seeing this as a wave 1. And this we are seeing as a wave A. These we are seeing as a wave B. And not until we break above here, once we break above here, we know definitely that we are going up in a sharp wave 3. But now, this is a wave B, and this is, the B is also divided into 3. I mean, it's the C. A wave A, a wave B, and this is a C. Now, looking at this C, this is A of C and a B of C. So we need for us to break this B of C and this C of C, which we expect to be impulsive. This had confirmed that this is C of C. And as it ended, is another question we want to ask ourselves. But for now, we are seeing a reaction right exactly at 78. So the reaction is occurring at 78. Would it go down the more to tick 85 or 88? That's another question. So, but what we confirm that it's this. The first thing we need to do now is to see that are we going to take this top here? Once we kiss the top and we break it above, we are in a new wave. This is complete. This is complete 5 waves to the downside, except they want to have a big fall here and still throw the last 5 waves to the downside on the last small bit of way to the downside, except that. So in case they want to do that, this is ready to go up. It's only that you don't want to buy blindly. If you have picked anything from here, it's good for you. You may just, leave your trade to run and hide below this support. And hide below, probably this support is huge anyway. And that's one thing, it's how to take risk, or rather you wait for this to break the bottom, then one again look for your buy setup and buy. So there are a couple of things you could do here, but I don't see this breaking below 88. That's what I'm saying, in case it turns out to break low one more time. So what we are waiting for on Euro USD, it's a break out of this point, out of 1.06900. So once we break out of 1.06900, so we are in a new wave. The price can go up probably to test this area of supply. So once we get to this area of supply, we may sell to get to an area of demand to go up again. So we are looking for what, if we break here, how much area of supply this price is going to walk into before we come to the area of demand again, before we go up. So now this is the first area. And in case we decide to break this, that means this becomes a wave 1 and a wave 2. Then we're going to have probably at 100% extension to the downside, but not more than 161.8. I'm going to use this to teach us something now. Let's go to a 1 hour time frame. Oh, before going to 1 hour time frame, let me show us something so that the levels are marked out here. The levels are marked out here. So I'm going to bring up my drawing. So we see this low, and this is the low of 100. This is at 78 for now. So let's look at our marking. It's going to be messy, but just this area in pitch, they are the demand zone, which price may still work closely around this area for us to have a push and a big reaction to the upside. So don't be surprised if price will break low to touch this area of demand. So this is 78 right here, and this is 85 at this point, and the last area here before this last pitch is 88. So these are areas that we may have a push down to touch before we get a reaction. And if we're going to get a reaction here, then the price will have to take the low. If you're not going to get any reaction here, the price will break this top. That's what I'm saying. So let me go to 1 hour time frame. All these things you can do on your own. So for now, on the 1 hour time frame, let me even go to 15 minutes time frame since I'm trying to teach us. Good. So we are saying that this could actually be a wave 1 or a wave 4. If it's a wave 4, that means we are going to break low. So this can change to be a wave 1 if we take this above. That means this will now become a 1 of the first move, and this becomes a 2, and we are going to have a 3. But for now, I'm still calling for a bit more downside, even though these are completed like a 5 wave, a 3, a 4, and a 5 down here, and we are seeing this push. This may be a 4. It will stop being a 4 once we take 1.06900. It stops being a 4, then it cannot be a 1. But for now, I'm still calling bearish until also we break this trend resistance. So the price still have that tendency to push to the downside. Now, in terms of this one being a 1 and this one being a 2, it shouldn't break 88. Right now, we are seeing this reaction at 85. So let me try and zoom in. So for what we know, we don't want price to break above 88. Otherwise, it stops being a wave 2. So this is 85 and this is 88 here, just slightly. Yeah, that's 88. So the red area is the 88. The price is reacting at 85 now. So 85.4, that is where we see reaction right now. So, and with this break of this trend, it means that this had completed its own work. Is it a 1 over 3? We need, if it's going to be a 1 over 3 of a wave 3, if this is a wave 1 and wave 2, if it's going to be a 1 over 3, it's supposed at least to break this first. And that's a clue. So this looks like a wave 2, and ABC of it has ended, and this may be coming down because it's the first impulse. You know, we may be coming down to break, to take the top, the bottom. So in that case, I may want to see this happening now. I want to be like more bearish, in my opinion, because bearish for a short time, because we know what we want to do in the hand is to still go to the upside. But in a short time to be being bearish, then let me now zoom in and for you to see my analysis here, using a Fibonacci ratio and with what we know of wave. So let's take it. So taking it up like right now, we are looking at 100% to 120, 168 retracement to the or extension to the downside within this wave 1 in the yellow now. So we have these, then we take it to where we are seeing reaction right now. All that will change once we have a break out of here or below here. So now at 100, this is where 100 is at this moment. So we might have a wave 3 stalling here. Let me just be quick and push this thing. So where's 100? Oh, 100 is actually right here. Hundred is really right here. So this is 100. So 100 is right here. So you can see how corrections and all of that can change your entry. So 100 is right there. And 127, which I doubt, if price should break 100, is going to come to this demand zone. So that's why I have to use this dash penetrated line, because I know that price will break it. Once it breaks below 1, it's going to break this. I want us to profit. So that's why I'm going deep and dissecting this. And so if that happens, expect price to knock off 127. If it breaks here, it's going to knock 127. And of course, we are looking at wave 3 now. Wave 1, wave 2 is gone. We are looking at potential wave 3, or we are progressing to the upside. So once we break above here, forget. We are only going to correct to go up. So, but once we turn to the downside and we break this, then that's wave 3 in progress. We are going to do a 4, a 5. Then 161.8 actually is going to fall. So it's going to fall. Let me take this out so that I don't have too much drawings here. Yeah, so for this one, 161.8 is actually on 85.4 retracement. So, and this is 88 right here. Let me take this out. So the potential place I see price is now not more than 161.8, which is at 85.4. And this is 88 right here. So price may walk down to 1.05400. So, but below 88, 1.05200, I don't see price breaking that. So that's what I'm saying now. So this is 88. So now anywhere from here we may have, and so that will now make our 3, our 4, then our 5 probably will end around this area on the golden yellow. And so that ends our wave 2, may end our wave 2, and our wave C may end here. So that's what we are saying. And so potentially it's a big that could break your account. Potentially price may still drop by about 60 pips. So that's what we are saying. From this new low, or from this recent low, price may still drop about 60 pips to the downside. So we must be ready for that. And in case it turns out to be like that, look to catch a buy, because it's going to be a very sharp movement to the upside. And we are not seeing the sharp movement right now. And this thing still looks potentially bearish. That is what I've said. And that's it on Euro USD. So if we now go to NZD, and there's another place you can catch an opportunity to buy now. We are almost there. We are definitely going to be seeing some reaction this week, and the reaction may be favoring the other currency. The dollar may be falling after that push down that we expect, in case it happens. Now, on NZD USD, what do we see? So the mood of the market captured when you see this on the 4-hour time frame. You can see this candle on the 4-hour time frame, even though we had seen this, and this looks like a fall. This mood here suggests that there are still liquidity to be grabbed here. Is a reaction. This is not a proper price action for us to buy. So I still see this going down, down a bit further to complete. So this may be a wave 1 and a wave 2 in the making. We might have a wave 3, just like in Euro USD. So they are all saying the same thing right now. They are all showing the same configuration. So for me, as a trader, where we don't want to break low of here. So potentially, price may also cap here or not. We don't want to take the end of a 5,700. So if anything, we shouldn't take the low of that. So if you want to take a buy, you can put your stop loss here at 0.57450. It's okay. 0.57450 or 0.57500. It's okay, because we don't expect price to take this low here at 0.7750. Price should not break it. But we had seen reaction initially at this point and a slight break, and looking at where 88 is, 88 is still slightly low here. 88 is at 58450. So price may still come a bit to that side or walk into this zone, like we know, but without breaking this area. Price may touch a 58200. Price may touch that by sheer manipulation, like what I just told you at the beginning of this video, of what I know, that 88 may be the last bus stop, or will not break a wave 1 before we have a push to the down, so the upside. So, but properly, price may begin to push up anytime soon from here, either capping this area to truncate with 5, or come to this area, and before we have that push push up to the upside. So now totally the same thing, you know, what we saw on euro dollar, in case we're going to have anything similar. This time around, we might not just have more than I don't think this one is ready. This might push slightly up to finish this wave. I think this may still go up to finish this. Except this is wave one. No. Okay, no, it's gonna be, yeah, except this is a wave one and this is a wave two. But I think it's looking like this is actually a wave one because this broke this structure. So we have to realign ourselves. This one looks like a wave one here. And so we are trying to do a wave two now. So I think the same way with, and this might be a wave four, a wave three, a wave four, a wave three, a wave four. A wave four here. If we break above here, then we know we are broken away, you know, from wave four. So this looks like a wave one and a wave two until that changes. So if I zoom in on your NZD USD, so where we don't want to take is still 88 retracement to the upside. Once we approach that, we know that we are going up. Price may break up. It doesn't have to respect anything. So this is 88 here. This is the last place that we expect this price to turn to the downside, to still be a 2. And this is 78. Temporarily, we are seeing this reaction here right now. Let me just take this out. We are seeing this reaction right now, a bit above 61.8. But price potentially could still spring up, you know, before I can't, unlike Euro USD, sorry, unlike Euro USD, I still can't plot anything here, as this is the end, as this being the end of wave two here. I can't still plot that. I need to see a break low first. This might be a first reaction, you know, A, B, might be a C, it might be anything, but we need to take this further low for me to know that we are going down. But if this begins to go up and take this top here, then we know that we are going up. So if you're in a buy, still maintain your position of a buy with the with an high that this may still turn lower. Now, but if we take this as the upper limit of the possible correction for wave two, that can also guide us. So if we're going to do that, let me even use yellow for it as a possible height of that correction. Let me use yellow for it as a possible height of that correction. So if we're going to have that, so it means that this may not do more than 100 extension and not 161.8. It means that we may be having this. I can even use purple for it so that it does not confuse us with the yellow line that we have. So let's use purple for this, or golden yellow. Yeah, let's use that for it. And this low here. So it means our 100 will be somewhere here. Our 100 will be somewhere very close to 88. So our 100 will be very close to 88. That's where our 100 is likely to be very close to 88. And our 161.8 is going to be here before we break the low, which I might not expect price to do. Whatever it is, this might be the last area you will expect your price to come to. And from the recent low, that also is still a bit big. But we have to see it respect 88, how it's going to respect 88 at this point. From this low down, it's about also about 60 pips. So both are giving us 60 pips to the downside. If that would come true, that's the max. It could be less. If it reacts at 100, it could be less. That is what we can see here right now. That's what we can see here right now. But we are very, very close to the end. You have to be very careful selling. Selling is not what you can take, to buy, but to sell is hell no. And this is 161.8 to this 100% is not likely. Price may want to use this 88 or just touch this demand zone and bounce to the upside. So you have to be on the lookout for this. Just like I said concerning Euro USD, once we break above this area, we are going up. But from the price action and all I can see, I think the momentum is still towards the downside and probably rounding up on wave 3. Probably one more push to the upside, a wave 5 to cap here or not, then we trust to the upside. So that's what we are waiting for. So we are almost at the end, and I think it's going to happen this week. We're going to push up. Now, going to the gold. Now, gold. USD. Gold. So looking at gold, gold has been in consolidation on one. It has been under consolidation now. So this for me, it looks like price will be coming here, might be taking, it might be interesting as other commodity will finish up selling and dollar losing. When you expect dollar to be losing and others are rising against dollar, dollar may be gaining against gold, but we don't know that for now. What I'm seeing here is where I don't want to be, trading gold. This looks corrective to the upside, sideways correction to the upside consolidation. And if anything, if you are looking to sell from here, you may look for yourself, but your stop loss should just be around this area because price may still break up. That is, gold is not what I want to see. I want to trade for now, personally. There is a tendency to still push up. And this has fallen out of wave 3, and this may be seen as a wave 4. This going up may be seen as a wave 5, and after that, we may be seeing a big fall, or a big correction. So we're not in that correction yet. We are not. And these are area of liquidity that the price had gotten into for now. Here, if you see this as a 1 and a 2, you might be seeing a 3, a 4, a 5, and then the 4. For now, let's just hold on gold and, go to what is more clearer. The other ones are more clearer. Euro USD is clearer. NZD USD, those ones are clearer to gold, except you have money to throw around and blow. For now, not only I see something that is a clear setup on gold, I won't trade it. With that, I've come to the end. See you during the week. Bye.